A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
The unthinkable just happened, guys. SVB, the 16th largest bank in the United States, just went under. Moments after Security Bank also got shut down as well. And fear is everywhere. But don't worry, guys. You're watching my YouTube channel, and here's how you guys can capitalize and safely invest in this market. And I'm gonna answer the question we've all been dying to know. Are we safe? And how are we going to invest to set us up for the future? So before I answer your question, let's talk about what happened here. SVB, why'd they go under? Basically what had happened was, when you deposit money into the bank, they don't just keep it in their banks, because then they would be losing money. But instead, they take that money and they start investing it in different aspects like treasury bonds or loaning out money. And that's exactly what they did. But unfortunately, when the rates were low, they bought treasury bonds. And then what happened was the feds kept hiking up the rates. And so therefore, those treasury bonds that they bought were worth significantly less. And then, now that tech startups are not doing so well, they actually need access to their capital. So when they were pulling those money out, the bank didn't have enough to fulfill what they were asking for. So they had to actually sell their treasury bonds at a loss. So now what they created was a bunch of fear and a bunch of panic, because now the bank is actually losing money and people aren't sure if they even have enough to pay them. And so that's what happened. People went to the bank, tried to pull out all the money. The bank didn't have it, so they tried to raise funding. That caused more fear. So the stocks just started dropping so fast that the FDIC had to come in and stop trading. And as of today, they are saying that everybody's deposits are safe and that everybody will get their money. So whether they perform and they do it, that's another story. But that has calmed down the situation. They're kind of too big to fail. Feds are now saying that they will not be hiking the Fed rate in March, so that's gonna be good. So what's the bad side of this? Look, this can be the beginning of something very bad. This came out of nowhere. Banks started dropping. Many more banks could go under as well. Look, the FDIC does not have enough money to cover everybody's deposits, and that poses a problem for us. Is our money even worth anything, right? Because now the government has proven that they're just gonna continue to print money, which is what got us into this situation in the first place, to solve the problem. So we should all be a little bit worried here. But what's the good side? There is absolutely a good side to all this madness. And I'm gonna tell you this, during every economic downturn, during all this commotion, all these bad headlines, you bet that there are opportunities. So let's talk about some of the opportunities right here. Number one, the stock market's down, S&P 500's down, bank stocks are down. This poses as a really good opportunity for us to jump in and buy things at a steep discount. Now, I'm not a financial advisor, so I don't want you guys to go out and just dump your whole life saving. But what I will advise you to do is that it is always through small, incremental, steady investments that lead to big returns. So I would suggest this. If you have $100 to spare each month, just invest that into the S&P 500. The ticket symbol is SPY, or you can do something like VTI. Just get some money into the market and don't worry about trying to slam it and timing the market, because right now, as it is low, we know that in the 100-year history of the S&P 500, it has always gone up anywhere from 7 to 10%. So this is a great time for you guys to start slowly investing each month. Again, don't throw all your eggs in one basket. If you commit to 100, spend 100, and don't try to wait for it to drop low. Just if it's the first of the month, invest 100. That's what you should do. The secondary level is if you have a little bit more, now is a great time to actually invest into the treasury bonds. Why? They're paying a little bit over 4%. Very secure, very safe, unless the United States goes poof and disappears. But that's a good way to just put some in, get a good return on your money, and very, very safe. The third thing that I would do, guys, is start buying real asset. Now, those of you guys out there who may not have a lot of capital to just push out right now, I get it, and I got a tip for you guys. Just watch till the end. But what I would advise you guys doing now is start buying rental properties, start buying commercial buildings, or even just start buying a home. But you bet that you should negotiate the heck out of the prices, because interest rates are high right now. But what has been proven, guys, is that the asset, the real estate, is not going anywhere. Your money in the bank, after last week's scares, just proved to everybody that at any given moment, I don't care if you have $10 million, $20 million, it can just go poof. And you are all scrambling to figure out, is my money safe? So invest into real assets that will produce cash flow for you guys to spend. Bonus tip, guys. Whenever there is big scare, big headlines, and a lot of fear, this is actually when I go into my negotiation mode. This is a skill that I have developed. This is a skill that I have built over the 10 years of me doing business, and you guys can do it too. But I am now approaching every single seller, every single property, and I am more aggressive than ever. And I am now using this line that I want you guys to learn and use as well. I go to every single seller, and let's say they're offering, they have a property that's $1 million. Instead of me buying the property, getting a traditional loan, and giving them the $1 million in which they have to go put into an unsafe bank, I say, hey, you know, we can't trust the bank system right now. Why don't you become the banker? And instead of me going to Bank of America and getting a loan, why don't I go to you and you become the bank? And you loan me the $800,000, I'll give you $200,000, and we could work out an interest where you earn the interest. Wouldn't that be fair? Because rather than you putting that $800,000 or $1 million into the bank and earning 0.001%, or even if you put it into a treasury bond and earn 4%, why don't I give you 5? Why don't I give you 5.5? You'll make more than that, it's safe. If I don't pay you, you take your property back, no big deal. That, guys, is how you should be negotiating every single one of your deals. Now, the last thing I want to leave with you is this. At the end of the day, for those of you listening who may not have millions in the bank or even a couple $100,000, now is when you start investing in your skills. I can't stress the importance enough. Learn how to sell something, learn how to buy stuff, learn how to negotiate. It is through these times and keeping your eyes and ears out for the opportunities that's going to really get you through, and that's really going to put you into a better place for the future. Thanks so much for watching, guys. Hit that subscribe button, and if you guys want to learn more, I'm going to be dropping more tips, more tricks, and I want you to watch this video about how to wholesale properties.